Welcome back. You're watching The Market. What we've been seeing of late are the banking stocks behaving like laggards. One of the attributes to that has been that are they not reinventing themselves fast enough? For example, there is a new rage that is on. It's certainly very popular with the younger population, and we do have the demographic dividend to talk about, which is buy now, pay later. Click a button. Don't worry about paying now. You pay later, you defer it. Fintech companies, payment apps say there are no hidden charges, there is no interest, but is there ever a free lunch? We're going to be talking about this new trend that we have been seeing, which according to Bernstein is going to become a $100 billion opportunity by 2025, with Bajaj Finance being the market leader and controlling nearly 33%. That's $33 billion. So let me welcome our guests who are joining us live today on The Market. We're being joined by Tamal Bandyopadhyay, author and senior journalist, Upasana Taku, the chairperson and co-founder and CEO of MobiKwik, which is of course IPO bound. We're also being joined by Yezdi Lashkari, the founder and CEO of Flexmoney. Welcome to The Market and the show. Tamal, I'm going to come to you first. I was reading a recent article when you talked about the crisis the Indian banks seem to be going through. You go back to the 1994 prophecy of Bill Gates when he said we will need banking but not banks. Is that coming true? Is that what we're actually seeing?
Well, one correction is this. I said existential crisis, not not crisis in a sense. It's a doomsday for the financial sector. It's an existential crisis. And you are right. I think many of us are asking this question. I'll go back to one quote which Mr. Aditya Puri has recently said, not recently, sometime back. He said, look, at the end of the day, you get a good chef and you get a great Michelin chef, you get a great kitchen with all kind of devices, temperature control and best of spices, etc. And you ask the chef to do a chicken dish. Now, the chef will not be able to do that despite his expertise and despite a fancy kitchen, of the support of a fancy kitchen, because he doesn't have that chicken. Without chicken, you can't make a chicken curry. So the banks have the advantage. They have the chickens. They have the customers. So, and he was talking about the OTT, basically, over the top. So will the banks allow them, somebody else to ride over their infrastructure, or will the bank disrupt themselves? Now, that he has spoken about a few years back, before the COVID crisis. Now, the digitalization has, the way it has advanced in the past 2 years, it has changed. Now you don't need the customers. You can use the customers of Amazon, use the customers of Flipkart, you can use the customers of anybody else, and you can actually do sort of alliance. You spoke about Bajaj Finance. I know a bank, IDFC, also has done with Flipkart and Amazon. So I buy something and the EMI is done. I'm not getting into all the nitty-gritty part of it. So yes, this is a big challenge. I think the two big challenge for the existential crisis for the Indian banking system at this point of time is, one is technology and other is market disintermediation. So those who can, particularly the not so big banks in the public sector, definitely for them, because they are neither technology savvy as they should be in the current scenario, nor have the advantage of the kind of customers which others have. So it's a problem for them. How do you grow your credit? So on and so forth. We can discuss later. But to answer your question, yes, this is a big challenge. Technology is throwing a challenge. And for the first time, not only on the asset sides, even on the liability sides, technology is throwing up a challenge. You have seen what two of the entities have done that. And on their platform, you can raise the banks can raise their deposits. And I am told that they're getting good deposits. So it's not the assets only, even on the liability side. Banks have started facing problem, challenged by the technology, the fintechs or whoever you call it. Over to you.
Tamalda, good morning. Thank you for joining us. Now, we can challenge Mr. Aditya Puri's definition of the chicken by saying that, look, the protein chicken has taken over everywhere. And, now it's the new vegan time where the definition of chicken itself has changed. So do you think
Yes.
we are in that kind of a world where we need to say that, look, chicken is important, but it may be a different type of a chicken, and that is technology and that is the new customer experience?
No, absolutely. No, what he said is this chicken. So banks were actually, had the strength of customers. That look, you are a big tech, fine, but where are your customers? You need to come to us and form an alliance. And if I'm a smarter one, I will not allow you to ride on me. I will use you for the alliance. But that's not happening anymore because whatever the architecture which is now unfolding before us, you don't need, you can get Flipkart's customers, you can get Amazon customers, you can get Zomato customer, you can get Swiggy customers, and start lending to them. The NBFCs can do that. So the smarter, well capitalized, best rated NBFCs, it's advantage to them vis-a-vis banks in every way at this point of time, be it cost of money, be it customer acquisition, be it technology. Yeah, Nikoj.
Okay. Upasana, if I could get you in as well. You know, the revolution was earlier caused by UPI in payments, and that's going to, come in lending as well now. What is your own view on the primary drivers that are going to grow this market up sizably, and what does it really mean for the consumer?
Yeah, thanks. Thanks for asking me that. Actually, I confer with what Sir was just saying that. See, today India has, I'll just summarize from the point of view, whether it is Zomato or whether it's Swiggy or all the e-commerce companies put together. India today has about 250 to 300 million digitally paying users. Everybody else is still on cash. Now, of this 300 million users, only 35 million Indians unique have a credit card. So as you can see, credit has barely scratched the surface with a 3% penetration in the country. So it's even larger market, like you had rightly said right at the beginning, than the payments market. And as the internet economy in India will grow, this gap is only going to widen, which is where I think fintech companies and the buy now pay later play will make a lot of sense to these users. Because see, credit has to happen. It is just that, we spoke about banks. Banks, of course, have 650, 700 million customers. But the problem is that all banks and all NBFCs, rather all legit financial institutions, they are all focused on the top 100 million Indians in terms of their economic spending power and earnings. And because that's where they make larger amounts of money. If you think about the middle classes of India, who are going to become these digitally paying users, and that delta of 270 million that already exists, these are people who earn 25 to 50,000 rupees per month. So you can't really give them a 50,000 rupee credit card, or an EMI product can be given maybe once in a year to buy a refrigerator or a television, etc. Which is why, I sincerely believe, in fact, that is sort of the vision of our company, that the way credit is going to get cracked in India is by virtue of pay later, buy now, pay later for daily life purchases. So whether it is ordering groceries or food or travel or even paying bills for that matter, think of it like your digital credit card for your daily life spends. Just the limits are proportionate to the user's earning power. So somebody who earns 25,000, maybe their limit is 2,500. Somebody who earns 40,000, maybe their limit is 4,000. And a play like this at these smaller ticket sizes, can only happen completely digitally. And I would like to correct you, credit is not possible over UPI, because UPI is working on the banking ecosystem on the bank account. Credit digitally in India is only going to happen either via a card approach or a wallet-based approach, because you need a container actually to park the credit. If you put the credit in a bank account, then it's a personal loan. It's not really buy now, pay later. And to that extent, any company that has the structural advantages of having millions of users of having the merchant payment ecosystem as well as the data of the user, which is very important for credit underwriting, because even the credit bureaus in India have very sparse data. Again, on the top 100 million, the data is good, but after that, it thins out because nobody has ever had access to credit, which is why I think that the buy now pay later space, fintechs, will come out very aggressively. Already people are trying. We ourselves are trying to be the leader in this market, given the 108 million users and 3.5 million merchants that we already have. It just give us a leg up in contrast to several NBFCs who really don't have a digital play in the country.
Yezdi, if I could come to you as well in on this discussion. I mean, all major financial services are offering and the same services. They're working on their technology to try and get adept to the BNPL platform. What I want to talk about is what is going to be the differentiator and what are they going to really look like?
So I think that, first of all, thank you for including in this fantastic discussion. I actually agree with both Mr. Bandyopadhyay and Upasana on their points. We saw the same we looked at the same landscape and had a different insight, in terms of 30 to 35 million unique credit card holders between banks and NBFCs, about 900 million account relationship asset and liabilities, give or take, right? And what we recognized was that the credit card is never going to be a mass market instrument for India, given the income distribution, etc. So we looked at this and said that what the legacy banks and lenders don't have is the digital transacting credit instrument they can offer as a standard product. The banks and legacy lenders are very good at offering a standard product. The problem is that the products they've been offering don't really satisfy the mass market in India for a variety of commercial reasons. Credit cards only apply to the top, 3 to 5% of the economy, etc. So we started out to build that standard product, which is now sort of called buy now, pay later. We called it sort of a digital purchase credit product when we started out. And I think that what we are seeing in the ecosystem is a real willingness, especially after COVID, after the increase of digitization, for banks to sort of offer this to their customers, right? So there are two models. I agree 100% that a transacting digital credit product that has sachet size limits, 10,000 rupee limits, 15,000 rupee limits, which you cannot do with a card, has to be fully digital, is going to be sort of mass market credit for India. But there are two approaches, right? There is sort of the vertically integrated approach, which a MobiKwik takes, which is they acquire the users, they acquire the merchants, they underwrite, they provide the balance sheet end to end, sort of like an American Express, if you had to sort of do an analogy to the cards world. We are like Visa, right? We provide the standardized instrument for any bank and any merchant to offer as a checkout option, right? I think both are sort of looking at the same large opportunity that's opening up. I think buy now, pay later is going to be the mass market digital credit instrument for the next generation. There is no doubt, right? But there are many, many ways to cut that pie or make that chicken curry, as Mr. Bandyopadhyay made the analogy. Our approach is to sort of empower the ecosystem. We want to be the BNPL credit infrastructure for the consumption ecosystem. That means we plug into banks, we can host a pay later backend, which their backend legacy systems cannot do today, right? We can then distribute that across our points of sale. We are integrating all the large merchants, Flipkart, Amazon, we power IDFC's EMI checkout at Flipkart and Amazon, for example, that Mr. Bandyopadhyay referred to, right? And the idea really is that we are an enabling infrastructure, and our insight was the banks have a lot of existing relationships. They have KYC on file, they have a repayment instrument. There is trust in a lot of cases between the account holder and the lender built over years. What they lack is a product that they can issue at scale and profitably. And that's what we are building for them along with the distribution with partners. So.
Okay, great points being made over there. And we talk about cards as well. Don't forget the merchants have to pay a higher fee for that as well, which also buy now, pay later is trying to break, and that's why it's also being preferred in a sense by merchants. Upasana, if I can come back to you, you made this point that, it'll be the payment apps which will be better placed than NBFCs. Which Tamal says are better placed. But if you look at a Bajaj Finance, for example, is doing the omni-channel play. It's going to have an online platform it is trying to build, and it's going to be going live later on quite soon is what we understand. Pine Labs has done whatever it can, but you've got new NBFCs, whether it's a Cars 24, whether it's a Car Deco. My point becoming that unicorns are also now applying for NBFC licenses. Isn't that something else to watch out for?
So firstly, I would say that the market is so huge that there's no need to worry. I'll just again summarize. India has 1.3 billion people and only 35 million have a general purpose credit card available. So we have to believe that with the pace at which our economy is developing, with the pace at which our internet economy is developing, there's got to be more credit customers in the country. One of the reasons that we don't have more credit customers is because the traditional financial institutions have only built physical distribution, either via their branches or via what is called a direct sales agent. Had they built digital platforms 10 years ago, then we would have had more credit customers already. You brought up a good point. There are quite a few NBFCs that have built to scale in the last 10 to 15 years, especially in the consumer durable financing space. But there again, I would say that, they have been operating at the 30,000-50,000 rupee product where you buy a refrigerator, microwave, washing machine, and you pay back in 6-month or 9-month EMIs. I'm saying that how many such products do customers buy? Is someone buying a 40,000-50,000 product every month? I don't think so. More people are actually spending money on travel, on groceries, on paying their electricity bill, Wi-Fi bill, as well as just making purchases like, buying diapers or clothes for their child. So the point is that there is more to be done at an even lower ticket size. See, the banks were operating at a 1 lakh plus in terms of credit products. 15 years ago, some NBFCs decided that, okay, we are going to start at 50,000 and that's how we are going to increase the pie. I am saying that the market is actually at 5,000 and we are actually going after increasing the pie. So actually, I am not concerned at all about banks, NBFCs or other fintechs because the market is so huge. And as far as I can tell, because most of these platforms, most of these companies have not yet built digital platforms, they actually don't have data or the customer to underwrite them. You can acquire customers from merchants, but I'm not sure how worthy is the credit underwriting that you can do if you don't know the user's spend pattern, which is why I'm very happy going after sort of the mutually exclusive use case of below the top 100 million users where nobody is operating. And, MobiKwik is very happy to bring financial freedom to millions of Indians who are already transacting. And now we are offering them a pay later product called MobiKwik Zip, which they can use for the same payments that they've anyways been doing via our platform.
Right. My producer is saying we're out of time, so unfortunately, I have to wrap up this conversation. The next time we talk about fintech, what I would like to ask all the guests is that, it's not fashionable to talk about delinquencies, NPAs, how they track, that the repayments actually come through. That's a discussion we're going to have another time. I'd like to thank all the panelists for joining us live here on The Market. With that, we'll take a short commercial break.